Hey everyone, happy July. Welcome back to another portfolio review. Hopefully everyone had a good 4th of July yesterday. I am recording this on July 5th of Sunday. As promised, as soon as my M1 Finance monthly update came out, I would record another video, and here I am. As it sits right now, this is the only series that I am enjoying recording. Partially because I find finance really interesting right now. Kind of lame, but it is what it is. And two, because it's kind of like tracking progress for me personally. Seeing where I started months ago. We're now in July, and I started this way back in last September, so it'll be exciting to see where I am 1 year later. And also, I can always look back at any time and cringe at some of the stuff I said, or be like, wow, I can't believe I said that then at that moment when everything was coming crashing down, or whatever the case is. So kind of a couple reasons, but anyway, moving on with today. Since we're recording it on Sunday, there will be no change, so we can see where we left off on Thursday because the markets were closed on Friday. Unfortunately, not much to show. I don't have any more money that I've put into my account since the last time, and a lot of that goes back to the last video of paying off debt, which we'll get to when we get to the network tracker and we see the final fallout, I guess, of everything. So let's take a peek at history and see what has happened in the last little bit and what's upcoming. I guess I don't know if I noticed that or not, that I got a dividend from this one on July 1st. I don't know if I did notice, but that'll be something I'll have to go back and double check. But yeah, we got one from, I guess, the S&P 500 and one from Coke, and upcoming ones, which I did notice. We have one from Altria, Mazda, I guess. Even though I sold that off, I happened to hold it when they were paying out dividends, so I guess they were a dividend company. But gosh, how much money did I have in them? It was like 4 or 5 shares at like $3 a piece. So $15 to earn 7 cents. Actually, I think if I click on it, it'll tell me. Yeah, 4 shares. Yeah, it's a teeny tiny amount. Negative. Yeah, I don't know what that's all about, but yeah, they had announced it way back when. So then we got another $1 from Keurig Dr Pepper and $1.30 from NRI, and right now I'm only getting 10 cents for 13 shares, but I anticipate once the economy gets back to normal, they're gonna kick back up their dividend and it'll be really good. But I mean, even as it sits right now, $1.30 for basically having my money do nothing is fine with me. Let's head back here just for a second. So right now I have 13 shares. My total value is $90. So just having my $90 sit in this company is going to net me, I think it's 4 times a year, $1. If I can get back to history, $1.30. Now let's compare that to my savings account, which just now hit, like, since July 1st came around or whatever, it got its interest payment. I have like $1,000 in my savings, and it only gave me like 60 some cents for $1,000. So if I put 10 times more, I would get $10 instead of the $1.30. So this is kind of where I'm saying investing is a lot better than just having your money sit around. Is it important to have an emergency fund? Yes, that is very important, and that's something that once I'm done paying off debt, I'm going to start putting towards that. It's just I want to keep investing, but considering I'm so close to my goal already, why rush it? Because I think if I look into the cash, I have, if it'll load, hopefully it doesn't show anything. Private. Wow, this took a long time to load, but I have like 20 some dollars in the cash that I can invest at any point. There's not really anything right now that I'm eager to invest in. Wow, this took a really long time. Okay, we'll just cancel that. So I'm getting cash. It's a slow process. And then from the end of July, I don't know when the last time I recorded was. It was probably like a week or so ago, but like Shell and Vanguard, Bank of America, Kraft, US dividends, Pepsi, they all paid me. So that's really awesome to see that I'm just getting these checks. But as I've said before, it's these next 2 months, July and August, are going to be slower, and September is going to be a big month. So, and then, wait, did I do that right? July, August, September will be a big one. October, November, yeah. And then October, November will be slower months comparatively to the end quarter. But yeah, so not much to show. Some updates here and there. I'm still here. So, and same thing with the M1 Finance app. I haven't put any money in because I've been focusing on other things as well. Monday, as other updates, I am going to go to the bank and try to get pre-qualified for a mortgage. So we'll see how that turns out and kind of what I'm approved for it for that. But as you can see, July started off with Coke on this app paying me a little bit more and Nike paying me a little more. So doing well so far. But yeah, it's just like June was just a huge month. Like this whole page was filled. And then if we go over to the other one, this one was filled quite a bit as well. Nearly 80%, I would say, filled with dividends alone. So that's really awesome to see. I can't wait till next year when it's like double the amount. But right now it's like $25 is the minimum to automatically reinvest, which stinks because I would prefer the $10 again, just so it'd invest more often, but that's fine. So $18 here, and I'm sure we're at like $20 in Robinhood. So that's cash that I can invest myself to get the snowball going. But yeah, I mean, not really much to show because I haven't bought anything. I haven't added anything. My portfolio hasn't gone up. It's just kind of like once it hit this point, it's just kind of stagnated, which that's fine. I'm still getting dividends. So it's not like because I'm not investing any money, I'm not getting dividends anymore. Like I bought these, I'm holding them. They're still paying me. And yeah, so not much to show in there. And again, this isn't the main update is the M1 Finance update, but for people that maybe haven't seen my previous videos and this is coming, they're coming and this is their first one, well, welcome, thank you. Please check out my other videos if you kind of want to get the background of why I've ended up with some of these companies, why I have it set up the way I am, because I'm pretty sure I've explained it in previous videos. If not, leave a comment and I'd be happy to answer that on the next video or probably in the comments as well. So this is kind of where we ended on Thursday for gain loss and everything with these companies. There was a few episodes back, I think it was early last month in June. I sold off a bunch of companies like the free stocks that Robinhood gives you and some other ones that I bought, but I just didn't see the value in them anymore. To buy a couple shares of AT&T and I think maybe one of British Petroleum. But definitely thinned them down, and there's still some companies here that I am still considering to sell. General Electric has kind of been a company that's been lackluster for me, considering they only pay 1 penny per share 4 times a year, which is very insulting. I could put that money in something that pays way better for the same value comparatively. I don't know if there's really anything else. I mean, I like a lot of the ones I have. I have a good balance of really aggressive companies, but I also have, a decent amount of ETFs as well, which kind of spread my money out thinner compared to the money that I've put in. But, you can see it makes up 11%, close to 12% of this portfolio is in ETFs of varying sizes, we'll say. And again, that's just to kind of balance out my portfolio. So when, the market goes down, my portfolio doesn't go down as much because it's spread out a lot farther. And again, that's a lot of what investing is that people don't realize. It's risk management. For me, I'm not a person that likes to go gambling, so I want to keep my money safe, which is why I have a lot of these Fortune 500 companies or ETFs, companies that have been around for a long time. That's why I do dividend investing. When I see growth investing, you're basically, in my opinion, you're risking a lot of your money. Like Tesla probably is kind of an example of one that you're probably not going to lose too much money on, depending on when you buy it. Amazon's another one. Facebook is another one. You know, those are companies that are going to be around for a long time, I'm sure. And yeah, I mean, those are good growth companies. Netflix, possibly. I don't know so much about Netflix just because there's other apps that are coming out that are trying to stake their claim. You know, Netflix initially used to be like a DVD delivery service, essentially. You would pick a DVD, they would ship it to you, and then they moved to streaming, and now everyone's copied that formula. So it's just, it seems like a lot of these growth companies are ones that come and go, and that's just not a good spot to hold your cash, where, you know, some of these other companies, I think, just do a lot better job. So kind of my background for why I do what I do, and the ETFs just kind of help balance it out and lower my risk a little bit more. Plus, they still pay me dividends, which is what I enjoy. Speaking of which, again, I noticed some things when we were looking at the Robinhood portfolio. So these 2 months for sure might not be totally up to date and accurate, but it still gives us idea of where we are going this year. So looking at these numbers is one thing. Looking at this chart says a whole nother story and is a little easier to break down. So you can see in January and February, we had a very consistent like $2 to $3. Then it jumped up to 11. April and May, we had a close to 7 to 7.5, jumped up to 24. I'm not saying that this is going to be, you know, parallel to how much it's going to be, come like, you know, like it might not be like September is going to be $30, but it very well could be, because right now we're already looking at $10 for July, and I'm sure August can be right about the same, but you never know. It just depends on what my companies are paying out. But yeah, we're already starting to see that growth, you know, from the first quarter to the second quarter, and now we're on to the third quarter where we're starting to do a lot better. Despite companies that have allegedly cut their dividends, or, you know, us being in a recession and dividends are supposed to be cut, I think we're doing really well. So, and you can see year one will kind of eliminate for now, as, you know, a lot of growth has happened since then. But it's still, you know, the first 2 months and then the third month, you can see there was a big difference. And I was so ecstatic when I was at $3 in December. It felt like every day I was getting a dividend check, and essentially I was. But now that's exactly what June was for me in Robinhood and M1 Finance. Every day I was waking up to some sort of dividend being paid out, bigger ones too. So, you know, that's nearly 6 times as much, maybe even a tad more, but good stuff going on. And if you're not familiar with this, I saw someone on another channel do like projected dividends. I'm like, that sounds like a lot of fun, because I wanted more things to do. So I do keep track of how many stocks I have of a company, what their yearly payout, and then what their actual payment will be for me, according to this chart. So let's take a look at NRZ. So they pay 20 cents. So maybe they only pay twice a year. I don't know if that's totally right, but either way. So $1.30 will be coming at some point, and then they'll pay out another $1.30. It's another point. But right now my projections are $2.57, and I've done this before. I'm about 25, and in 40 years I'll be 65, about the retirement age. So if I get $257 over the next 40 years, that's an extra $10,000 that comes to me that I can reinvest into these companies, and theoretically that would grow that number even more. Or if I just decided every year to pull that money out, put it in my, you know, whatever it is, that's an extra $10,000 that I get to keep myself. So 1 second, I just need some water here. So just to put in perspective how much, excuse me, how much $4,000 can do over your life for just holding it in there. I don't think, if we were to run the numbers of like $4,000 in a savings account and how much interest it would generate on the average interest savings account, investing probably blows it way out of the water. Not to mention the growth from your stocks growing in value dividends being changed over time. I mean, this is under the assumption that nothing changes and I don't add any more value to my portfolio. So really awesome stuff, in my opinion. Really exciting to see. So that's where we're at for this. Now for the main event, I guess, of this episode, the June update for M1 Finance. As you can see, from 1 month to another, we didn't really grow as far as portfolio value, but you can see month to month, our actual income jumped up quite a bit, as you can also see on this chart. If we went back last month, and if you watched not last video, but I'm pretty sure I covered it in the last video, even 2 episodes ago as well, I think 2 or 3, the dots were above the blue line, because this is the average. This is where my average monthly income will be, and the black dots are the actual monthly income. With the good month that we had last, like the averages all went up, and now every dot is either right at the average or below now, because we had such a good month. So what's that? If and today, man, these formulas that people are using. So anyway, yeah, so with that month, like everything just jumped up, and now my average income is at 117, which I'm pretty sure is closer to accurate of what it's saying on the file. Like when I look at it, it projects what my income is doing. It's basically doing what I'm doing here, but it did it automatically in the update. So anyway, let's do the same thing. So an average of 117 a year times 40 years, that's an extra $4,000. Add that to my other $10,000, that's $15,000 over the course of my life added to my income. So to put that in perspective, I'm getting close to the point where that is an extra year of income based on like minimum wage income for free, in a sense, because I had to spend some money in a sense on stocks, but this is money that I can get back at any point. I don't really consider this spent money because I can get it back and potentially make money on it. Yeah, it could be taxed, but if I hold it for longer than a year, then it won't be as bad. But and again, this is basically the same chart, but over here just without the averages. You know, actually this was 3 because it started tracking where this over here didn't start tracking September quite yet. I think if I close it out, it doesn't matter. But anyway, 1, 2, 3, jump, 1, 2, 3, 1, 2, 3. So you can see that we're still seeing those trends of those quarters where the first 2 months aren't as big, the third one is bigger, and we're getting that trend. And on top of that, it's, you know, this month to this month, this month to this month, this month to this month. And it's just, it keeps going up. That is the trend that I want to see, is that as I'm investing more money, I'm buying more shares of these companies that are paying me more money, and it just keeps going up. Because that is what's going to increase this average. Because according to next month, my average is going to be 133 a year, which if we just bring up 2 calculators, oops, I did not want to do that. But luckily that'll open it on the other one. Yes. We'll close that then. So if we compare 117 times, not 70 years, 40 years, and then we compare 133 times 40, that's a difference of like nearly $1,000 just from a difference of 1 month. Assuming that I'm also adding money into my portfolio, which I haven't totally, but I mean, you can still see that that's where we're going. And then if we just, you know, for fun, take a look at the next month, 147. We won't round up just for the purposes. That's another $500. Now, if I add more money into my portfolio, that's going to make a huge difference as well. That will change these numbers higher, but you can see like month over month, it's growing, and that's what this formula is figuring out for me. Where my stock portfolio one, I didn't know how to figure the numbers or whatever. This is actually figuring it out for me month over month where the growth is going to go, where my stock portfolio doesn't. So there's that. And yeah, here's a chart to kind of show that as well, that here's where we're at right now, and it's just going to continue to go and head that positive direction that I want to see. And right now its projections are June of 2022. I'll pass that $500 a year mark, which will be definitely something to see. And if we take a peek at my portfolio value again, I haven't done anything in terms of investing in probably about a month, which pains me, but it's for a good cause, which we'll get to now. Net worth tracker. I've updated it like I said I would. First thing you'll notice is there's a lot more dividing of stuff. I've made the darker color and then it goes lighter. As I add more years, I'm sure I'll, make this the darker one, this one the lighter one, and so on and so forth. But for now, this is where we're sitting at. As you can see, I paid off my loan last month. So now that is at 0. This month it's at 0. Nothing to worry about. My Mustang has been sold. I got $7,500 for it. So that's where you can see the initial loss is because I went from calculating this at $8,000 to this only going down $7,500. But once I get paid and I pay more of this down, this number is going to go positive pretty soon. So nothing to worry about there. I anticipate this to be paid off either this month or next month. Trying to think how much. I think I have enough at the end of the month, because what do I normally, because there's a couple months where I've put in quite a bit into investments, where that easily covers that. So that's my goal, is to have that paid off. Also, I'm probably gonna hide these columns since they're no longer useful to me, but I'll get to that in the next episode because it might change how everything looks. And I also kind of played around with adding another liability, for it being a house, and going from there, because that will be probably the next liability I have. But then I'll also add in the assets, my house value. And towards the beginning, I'll have a mortgage for, say, like $200,000. But then I'll also have my house value at $200,000. And as I slowly start to pay down the mortgage, the house value will remain the same or go up, and we'll start to see that difference. But we'll probably do what we did with these other ones and just kind of leave them very stagnant for a while, as it won't change much. Month to month, again, these haven't changed. Like, these values have literally stayed the same as I've been working really hard to pay off my personal loan and my car loan. My retirement account I haven't checked in a while, which I probably should have before this video, but again, I was going to check it last night, but I needed a text message, which I was charging my phone, so I was like, forget that mess. So, oh well. Yeah, I mean, not much has really changed overall. Like, my assets have gone down by quite a bit, but I've also dropped my liabilities. So in the end, my net worth has gone down a little bit, but I imagine that to change really soon, because now I have a more accurate of 30,000 in like pure assets that I actually like use on a daily basis. Like, I wear my watch every day, I use my car every day, and then these are the assets that I want to be a bigger portion of my asset portfolio than anything else. Then these ones, which are very depreciative values, I suppose, they don't generate me any income. They're more like, especially these two are closer into the liability column, because I'm paying for insurance, I'm paying for gas, I'm paying for maintenance. 3 things that are taking money away from me rather than putting money into my pocket. And the only time I saw the actual value of my Mustang was selling it, not any time before. Watch is the same thing, but the maintenance and cost of owning is far, far less, because of the quality of the watch is what it comes down to. There's no batteries to change or anything. as far as getting it serviced, it wouldn't be for 10 years. So it's going to be basically 2030 by the time I need to do anything with it. So yeah, that's where this is at right now. And then just a really quick debt snowball. I have it paid. I don't know if I had this in the last video, but nice big fat red text, paid for. This is really, really low. I've paid off $15,000 of my debt in the last year, we'll say, but it's really been in the last 6 to 7 months is when I've really been grinding on it hard. And now, since this is completely paid off, we are now putting and focusing more. The minimum payment will be $330 to get that paid off. I mean, assuming I don't decide to put any extra money, if we take that, we'll at minimum, very, very minimum, or maybe maximum, very, very maximum, we'll say, because I could pay it off a lot sooner than this. But we're looking at like 5 months to get it 100% paid off if we pay the minimum payment. So for sure by the end of the year, I'm 100% done with it. But I might as well grind it out now, save a little money on the interest, and then start getting my emergency fund set up and start investing some more. But yeah, as it sits, I have cleaned this up a little bit more, and I definitely like it. It's definitely has more room for expansion as we continue along. The only headache is going to come when I add and subtract assets and liabilities as life goes on. But hopefully this will just completely be empty, and the only thing that will be in there will be a mortgage, and that's it. Like, that's the only sort of liability I want, is a mortgage loan. Because everything else just isn't worth it. My car's going to last me at worst 5 years. And by then I'm going to, just buy cheaper vehicles. I don't like having a nice new vehicle is nice, but it's just expensive. Luckily the gas is cheap and the insurance is cheap. It's just having to buy that expensive of vehicle is the expensive part. But, who knows, maybe by then I can have, pay for a $10,000 car in cash and not worry about it. Because that'll be my plan going forward, is just not having to finance a vehicle. Because, I mean, like the 210 is cool and all, but you're paying for a lot of that in interest, where I could put that $210 back into my savings interest free. So just some things to think about, and maybe in a future video I can talk about that a little more, as far as the difference between like what the actual numbers break down to what your $210 payment pays for. But as it sits right now, I'm really happy with where things have gone. As I said in the beginning of the year, my goal is to have my debt paid off, and we were at $15,000 and nearly paid off now. And my goal is to have $10,000 in investments, which oops. Okay. This is where I was at the end of December when I made that video, 2020 goals. And then right away I was able to bump that up $1,000. And pretty much another $1,000 right there. So you could see that I was working really hard to invest in that, and then it was like another $500 and evened it back out, and working really hard. And now I'm kind of working hard on the debt now that everything's kind of dropped a little in the stock market. But anyway, guys, that's all I have for you. A little bit longer of a video, but wanted to cover some things, went on some tangents. I hope you guys had a great 4th, good happy 4th. Expect to see these videos continue on my channel. I don't plan on stopping these videos anytime soon, where my other ones I've kind of gotten bored of, in a sense, we'll say. But always really enjoy these videos. Thank you so much, guys. Take care. See you on the next video.